Hey everyone, I'm here today to talk about our house buying process. We bought our house 2 years ago and we were not maybe the best at finances at that point. We were just kind of starting on our train or process of getting our finances together. So my husband and I, we had some credit issues and we still had student loans, we had car loans, and we weren't really ready to buy a house, but we bought a house anyway. So if I had called Dave Ramsey, he would have said no, but we didn't really know or care about that at the time. So we went ahead. We really just wanted a house to start our married life together. So we bought a house. But today I'm going to get our closing documents out and go over what we paid, what we put down, and all of that. I love hearing about mortgage stuff now because I could have used that information when we bought a house. I was not prepared like I thought I was. I thought I was so prepared, but I just wasn't. We did not have a big down payment, as you'll see, and we weren't ready. We should have waited, but I love our house. I love that we live here. I love our neighborhood. And in the 2 years since then, interest rates have gone up and our neighborhood has pretty much skyrocketed. So our house is worth about $30,000 more than it was then. So it worked out kind of for us, but there were some downfalls to not waiting. If you watch any of my budget videos, you know that we pay $1,200 a month. And at some point, I'll probably break that payment down and show you what goes toward the loan and what is extra payments and what is taxes and PMI and all of that. But for now, I'm going to start at the very beginning with our mortgage info and what we started with for the loan and what we actually paid for our house. So I hope you enjoy. Okay, let's get started. So I have my paperwork and I am going to write out some of the key points just so you can get an idea of what we spent and kind of maybe what you could expect if you're a first-time home buyer, or if you are just, you like to hear about real estate stuff and see what people have done or made mistakes, or we made plenty. So I'm excited to share the real numbers. So let's get started. So we decided on a purchase price of $158,900. And that was down quite a bit from the original, not quite a bit, but it was definitely about 6,000 or 7,000 less than what it was listed for when we first saw it. And so we put down a deposit when we decided we wanted to buy it, and that deposit was $1,000. And that was just kind of our earnest money and first deposit. So we decided to do a down payment. This was a couple of years ago. It was actually before we got married. So we hadn't combined finances and we had not saved up a ton for the house because we were also saving for the wedding. So 5% was what we could do comfortably. So we did get an FHA loan because of credit issues, and we could not qualify for a conventional at the time, so we did get FHA, and that helped because we didn't have a huge down payment either. All right, so the total closing costs that we had to pay on this was about, let's see what the final amount was. It was $8,342.21, and that is what this kind of shows. And the final number, it was estimated originally that the closing costs would be, I don't know if you can see this very well. It was estimated originally that it was going to be $11,154, but the final ended up being $8,342. And then it shows you our down payment and the deposit, and then it shows you down here what the seller paid. So the seller, when we were buying our house, paid most of our closing costs. It was a pretty good market for us. It was a good time, and they paid $6,093 of our
closing costs. So that is something that was really helpful for us at the time, so we didn't have to come up with our down payment and a huge amount for closing. And they paid $6,093.22. And so I just kind of want to go over some of what that was. So there were a lot of costs involved, and so appraisal fee was $510. You probably can't see this, but appraisal fee was $510. The final inspection was $150. Credit report pull was $55. The flood certification was $12.50. And then here is something that I really did not like, but our PMI, we paid upfront. We have monthly and we paid upfront, so it wasn't great. It was $2,641.71, and that got us an amount. So this was upfront, and this is the downside to doing an FHA loan. And then monthly, we pay $99. And that is one of the reasons why I want to pay off our loan early and get to that, because with the FHA loan, we do not get to drop this when we get to 20%. So, and on a conventional loan, you get to drop your monthly PMI when you get to 20 or 22%. With the FHA loan now, you don't get to do that. So unfortunately, that is what we're stuck with. I actually looked into refinancing this year, and this is 2018 when I'm doing this video. I looked into refinancing, but because interest rates have already gone up, even though our credit is now excellent, it's actually both of us are in the excellent category, which is awesome. Go us, I guess. Because we are in that category, I thought we could maybe get a better deal and get rid of the PMI monthly, but it's not worth it. Especially not if we were gonna pay refinancing costs. So we tried to find a no upfront cost refinancing option, and basically everyone that would have we talked to, and they all basically had to end up saying this isn't worth it for you, because our interest rate, actually I haven't talked about that. So our interest rate was pretty good, even though we had not great credit because of the time we bought. It was 3.65%. And that was, we bought in July of 2016. So ultimately might not have been the best time because of we had bad credit and we didn't have the best down payment, but we got a stellar interest rate. And already 2 years later, it is not worth refinancing because it's already up to, I think, the lowest they could get us. And we were trying to get a 15-year. So it just didn't save enough to get rid of the monthly PMI. Basically, we'd be paying more in interest, and that just wasn't worth it. Closing costs. So that was the mortgage insurance premium, and then there's a closing protection letter for the title, the lender's title insurance, and a settlement fee. And that was $50, $750, and $650. Goodness gracious, there's fees for everything. And then down here for the tax and government fees, there's recording fees. That was $74. And then the state tax stamps, that is for the deed and all of that. That was $764. Down here, the homeowner's insurance, we had to pay that up front, and that was for the first year, I think, and that was $794. Then prepaid interest, which is from the time that we decided to buy the house to when it, on the 19th, we put in our offer, so that was $198. And then down here, it was the initial escrow payment, which was for the homeowner's insurance, the property tax, and the city property tax. We are in the city, so we paid both city and county tax. And then that was all added up. And it's so complicated when you go through these documents. It's not complicated, but it shows you like little fees add up and add up and add up. And we did not do enough shopping around. That is one thing I wish we had done. So our total sale price was, you can see down here, it was actually I don't know if you can see, it was $158,900. And then closing costs at the time of closing was $8,342.21, which was due from us total. And of course that was partially paid by us, but mostly paid by the seller. And because we had already done a deposit and a down payment, here you can see the amount of our actual loan. So it was $153,596. Goodness. So that is how much we started out owing on our house. And that seems like a lot, but I know a lot of people that watch my videos are in much higher priced markets. So this is a very low amount, and compared to our income, it was really reasonable. The funny thing is we were pre-approved up to $250,000. So we could have gone much higher than we actually went. And when we started looking, our budget, when we started was $150,000. And that was just a cap I put on us because I thought that was reasonable for what we could do, even though we could have bought a $200,000 house, which was a little bigger, a little nicer, or we could have bought a $250,000 house, which would have been not really a starter home, but this was our starter home. And this was the goal, to have a starter home, to get into a house, starting our marriage in a house and be there for 5 to 7 years. So this is definitely our starter home, and it's not the house we're gonna stay in. It's not a bad house, but it's not a large enough forever house to have multiple kids. I love it, but it is definitely a beginner house, and that is kind of evident in the 150 price range. So I did want to share what we have gotten our house down to. In 2 years, we now owe, let me find that. I'm not sure where I put my phone. Okay, so I pulled up my loan info, and we have paid it down in 2 years, a little bit over 2 years, and we now owe $1,444, $459.95. So goodness, that is, how much have we paid in 2 years? I actually haven't gone through this. So in 2 years, we've paid down about $9,136. As you can see, our payment, if you watch my budget videos, is $1,200 a month. A lot of that goes to interest and taxes. And then $100 a month obviously goes to PMI. And then about 80 or so goes to homeowners insurance. So the amount we pay monthly that actually goes to pay off our house is around $200, which is why in 2 years we've only paid down about $9,000. It is super interesting to see stuff like this broken down. I love learning about this stuff and seeing other people's stories, because it is not something that I knew much about when we bought a house. I was not super prepared, and I wish I'd done a little more upfront research and known where I could have saved money, especially in closing costs and saving on PMI by getting a bigger down payment. So that's something I totally recommend to people now. If you can get more money and for that down payment, you should totally do it. I do like that we got such a low interest rate, but if we had just waited a little longer, we wouldn't have the PMI, and I don't know. It's a give or take for what you want to do. It worked out in our situation, but of course you can always do something better. So this is our home buying process and our story and our numbers, and I hope this was really helpful for you. If you have any questions, or if you are, just curious, let me know in the comments, and thank you for watching.